Welcome back, dear traders. You're watching a review of the New York session on April 18. Wall Street is trading quietly today with a low volatility, though the benchmark indexes are following the upward bias. The economic calendar for the United States is almost empty this week, so investors will be focused on the remarks of the Fed policymakers and corporate reports. A two-day rally of the US dollar is over, and today traders are digesting data on the US housing starts, building permits, and Canada's CPI. Weak inflation will benefit the Dows in the Bank of Canada. Futures on the US stock indexes are showing muted dynamics. The Dow Jones edged up by 0.2% in the pre-market. The futures on the S&P 500 and the Nasdaq rose by 0.5 and 0.8% respectively. Having bottomed out in March, Wall Street indexes have grown by more than 9%. Despite interim obstacles, the indexes are extending the advance. Analysts foresee bullish prospects for their stock indexes, though they warn about brief downward corrections. The stock indexes closed with modest gains on Monday, so they recouped the losses incurred on Friday. The market looks resilient with minor retracements, which are used by investors to open long positions. The VIX index slumped to a one-year low. Analysts reckon that the S&P 500 could climb as high as 4,200 for a start. The next upward target is seen at 4,300. Nevertheless, the stock market's growth is subdued ahead of fresh corporate reports. According to Refinitiv, the aggregate profit of the S&P 500 is expected to decline by 4.8% in the first quarter from a year ago. Investors are closely monitoring corporate earnings of top American companies. They are especially interested in those firms that are already revised their investment portfolios. Top American banks and finance-related companies are due to report on their financial performance. Investors want to assess forecasts of executives in the wake of the recent bank crisis, which could be to blame for an economic downturn. Bank of America shares appreciated by nearly 3% in the New York pre-market. The lender revenue in the first quarter was beyond Wall Street consensus. Johnson & Johnson's also came under spotlight today after it had released its corporate earnings, which came as a pleasant surprise. The company upgraded its revenue forecast for the whole of 2023. The shares of the basic consumer goods manufacturer rose by more than 1%. Goldman Sachs shares dropped by 3% because of its lower than expected revenue. For the time being, quarterly reports by large American companies indicate their upbeat performance despite such macroeconomic headwinds as stubborn inflation and higher borrowing costs. Today, the market got to know the data on the US construction sector for March. Housing starts and building permits, following an explosive jump by 15.8% in February, building permits shrank by 8.8% with the seasonal adjustments. The actual reading fell short of expectations and remained close to the nearest level in 31 months. It means that demand for housing remains sluggish on the back of high interest rates and the soaring consumer prices. As for the US dollar, it was supported that the downbeat economic data on the negative territory would have weakened the greenback. In turn, positive data could encourage traders to buy the US currency. In fact, this report is of secondary importance because it does not influence policy decisions of the Federal Reserve. That's why the market did not give a strong response. The US dollar managed to rebound from a one-year low yesterday, benefiting from the scenario of the Fed's rate hike. Apparently, the US dollar spike was short-lived. Its index could not settle at 102 points. The index sank to 101 points because investors are still mulling over the prospects of the Fed's monetary policy. Investors cheered the data from China because they revived optimism about the health of the global economy. This sentiment dampened the safe haven luster of the US dollar. Besides, traders are anticipating more remarks from the Fed's policymakers that could shed light on the Fed's agenda for further rate hikes. Meanwhile, the market foresees an 87% chance for a rate hike by 25 basis points in May. At the same time, investors do not exclude the scenario that the United States Central Bank could even begin rate hikes until the year end. Today, St. Louis Fed President James Bullard provided the US dollar with support at his interview with Reuters. The policymakers said that the central bank would have to proceed with the rate hikes unless there is no progress in the fight against high inflation. Canada released the inflation data today, and the CPI skidded to the lowest level in 19 months. The annual rate decreased sharply to 4.3% in March, following a 5.2% in February, and the steep drop comes as a result of the easing inflationary pressure from energy prices. The USD card pay is trading steadily at about 1.34. The Canadian dollar retraced from a one-month high at 1.33 recorded on April 13. The notable inflation deceleration in Canada allayed fears that the regulator could resume its cycle of monetary tightening. A broad-based weakness of the US dollar is pushing the USD card pair down. The hawkish prospects of the Fed's interest rates could serve as a tailwind for the greenbacks of the USD card pair will not be able to fall considerably. The closing level is more important as long as the currency pair is trading below 1.3450 and it will hardly grow higher. On a Monday, Bitcoin went through a downward correction, having sunk below 30,000. Amid the positive trajectory of the US stock indexes and the US dollar spike, today trading sentiment in the crypto market changed. The Bitcoin rebounded above 30,000. Analysts are bullish about Bitcoin in the short term. Recently, investors were spooked about tighter crypto regulation. Meanwhile, they are entering the market again, increasing long positions for the fourth week straight. And the catalyst for the uptrend is uncertainty about the Fed's monetary policy and the forecast of a looming recession. Three domestic medium-sized banks fell prey to high borrowing costs, and the lending market shrank to a record low. The Federal Reserve is committed to its fight against inflation by raising interest rates. With such prospects, the banking sector will hardly avoid another turmoil. And in this context, investors are transferring their cash to crypto ETFs. The flagship cryptocurrency aroused interest by its stunning performance in the first quarter, in particular a 70% rally. Goldman Sachs recognized Bitcoin as the most lucrative asset of the year. As for the medium-term outlook for Bitcoin, analysts upgraded their forecast and now predict the token's growth to $45,000 in May. Good luck in your trading. Trade hassle-free with the InstaForex and see you online tomorrow.